The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Our stock of the day is Newmont. We've got a raft of production updates from the miners at the moment. Newmont out with its today, and the gold miner it shares plunging. They plunged in the US overnight and have done the same here locally after its quarterly earnings missed expectations. Volumes pretty much in line with forecasts, but the negative surprise came through higher than anticipated costs. With lower production in the US state of Nevada overtook a rise in total output. It's declared a dividend. It's not missed forecasts, and management has held on its full year guidance, but there is the formal approval on an additional $2 billion share buyback. And it all comes into those all-in sustaining costs there. But the stock is down around 7% at this point. And Mark, well, the gold is very much in focus at the moment. They've been doing very well, obviously, given where the price of bullion has gone. So how do you judge this result from Newmont then?
It's really more of the same. I think these miners got a little bit overextended. We've got that BRICS conference going on at the moment. There's 36 countries at that, which I find very surprising. Our plan was, we were long Newmont. We switched to Northern Star into earnings, and we sold Northern Star, I think, 2 days ago, and we've just gone to a more diversified precious metal basket. Just on the basis of, it's had a very good run. I think this is one of the strongest year-to-date runs in gold for like decades, basically. So it was always going to pull up at some stage, but particularly that BRICS, everyone was anticipating, Putin and Xi talking tough and de-dollarising, etc. After the first day, we really didn't hear anything out of it, which sort of that triggered our decision to be getting out. And but look, Newmont, obviously, it's the only gold miner in the S&P 500. So if you want to go and buy a gold miner, that's obviously for American investors. That's realistically one of the ones that's going to get picked up in the index. So I think this will probably be a long-term buying opportunity. As we spoke about, that debt issue is actually worse than first predicted. And basically, we're getting to a point where by 2028, half of their tax receipts are going to go in interest payments if they don't get it under control. And you've got, as I said, 36 odd countries. It's not just BRICS. There's not just 5 countries turning up now. There's an increasing pressure of countries wanting to decouple from the US dollar due to the fact that they just get the printing press out or they get out the gunships. But so they're so I think gold has historically played has been the transitionary money, basically, particularly when the sterling went to the US dollar way back when. So yeah, I think this will be, it's down 8% today. I'd probably be just letting it breathe for a day or two, and then somewhere around that, maybe that's $70 mark. I've got the US chart here, but the probably another 5 to 10% lower from here. I think you'd probably be safely buying the dip again, because it has underperformed. Northern Star's outperformed by about 10%, I think, in the last 2 to 3 months. So this one was lagging anyway.
Okay, so and that, well, you said you're now more diversified in your pick in the gold and the precious metals, but if you're going to pick a stock, this would be it?
A gold stock, yeah, at the moment, this one is the cheapest overall on our relative value models, but obviously momentum's been such a hard thing to fight lately, so we don't tend to be buying the dip on the first day after an announcement, because usually there's some follow-through selling in the coming days. So I think, but sometime probably maybe early next week, we'll be pretty happy to put this back on, I think. So,
all right, I'm going to
call it a buy.
Yeah, take it as a buy. Josh?
The shares are off a bit today, but as you've seen, it's had a great run. I think just the reason for the sell-off is a short-term heightened cost. I think it was over $1,600 an ounce all-in sustaining costs, whereas next quarter that's meant to be $1,475. So I think it's just a temporary dip. They're selling gold at over 2,500. If the current price hangs in there, that'll tick up to 2,700. So I think the overall trend is obviously with this one, it's doing quite well. I'd have it as a hold, and I wouldn't be too concerned about today's miss. Happens a lot with mining companies, as you can imagine. Things happen on individual mines that jack up costs every now and then, but I think the overall fundamental trend is with you here. So I'd have as a hold. I'm not looking to buy gold up at these levels. If you like gold, you probably would have bought it, around 2,000 or lower. So just have it as a hold for the time being. I think it's due to go ex-dividend shortly as well.
Have you got any gold stocks?
No, not at the moment. Not at the moment. We're looking at Gold Road Resources was quite cheap on its yearly average, and then that's just raced up in the last 3 weeks, up about 20% back to its highs. So, I think there's opportunities there for companies that aren't quite at their highs, potentially to play a bit of catch up. But you sort of got to pick and choose. Not looking to buy those ones that have already had the movement, like a Newmont or even a Northern Star, for example.
That is our stock of the day, a buy and a hold for Newmont.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.